What is going on, investors? Hopefully, guys are doing well out there. It's time to kick earnings season off. Taking a look at Taiwan Semiconductor Manufacturing Company, better known as TSM. The company just reported their Q4 earnings, so we'll take a look at the quarter, but this is also the full year earnings. We'll take a look at that. Did they beat guidance? Did they do well on their revenue projections? Did they do well from a profit perspective? We'll take a look at that. They also are making some massive investments in the foundries that they use to manufacture these chips, so we'll take a look at that as well. And we will look at this from a technical perspective and see where this stock is likely possibly headed in the coming days based on some technical analysis. So over the last year, this stock's up just 7%. We stretch this out to a 5-year chart. You're up 350%. And you see when we get over this from a technical perspective, this stock is looking a little bit like Amazon, where it's had this monster move and now it's going sideways. We'll talk about that from a technical perspective here in a moment. Now, the earnings just came in. This was Q4. Revenue came in at $15.74 billion. That's up, just 24% year over year. That's absolutely fantastic. Their gross margin in the quarter was 52.7%. Operating margins came in at 41.7%. Now, that doesn't mean a whole lot in comparison, because what we want to do is take a look at the upcoming quarter. So they gave us Q1 2022 outlook. So what the revenues and the profits and the results will go through is actually Q4. We'll talk about those here in a moment, but they gave us Q1 guidance. So that's the upcoming quarter. They're expecting revenues to come in at about $16.6 billion. I just told you they had a quarter where they printed 15.7. That's absolutely fantastic growth. And on the upside of that revenue, they might go as high as $17.2 billion. Gross profit between 53 and 55%. I just told you their gross margin in the most recent quarter was 52. So we're growing revenues at a very nice rate, quarter over quarter, year over year, and we're growing those margins as well. Operating profits between 42 and 44%. I just told you they came in at 41.7%. Absolutely fantastic. And it looks like this company is firing on all cylinders. Let's see when we look at these revenues. So this company does report things in the new Taiwan dollar over here on the right-hand column, but they did give us a United States dollar on the left-hand column. That is what we'll focus on. But we can also take these growth rates from a quarter over quarter perspective over here and a year over year perspective as well. Even though these are in their local currency, we can still use those growth rates. So we've got our net revenue coming in at that $15.7 billion. Again, I told you in the upcoming quarter, they're looking to do between 16.6 and 17.2. That's absolutely phenomenal growth just quarter over quarter, let alone the year over year print that is likely to do. We have some operating expenses. Obviously, it's not cheap to make these products that TSM makes. We have $7.4 billion worth of cost of revenue, but we still have a nice gross profit off $15.7 billion worth of revenue. You have this gross profit of about $18.287 billion. That is up 8.5% just quarter over quarter, and year over year coming in at 18.2%. That top line coming in at the aforementioned 21.2% growth rate on that. Now, we do have some operating expenses. Research and development came in at $1.1 billion. That's up 4% quarter over quarter and 7.7% year over year. No problems there. Selling general administrative expenses came in at $561 million. Those were up considerably, up 45% quarter over quarter and 86% year over year, but $561 million off of $15.7 billion worth of revenue is essentially a rounding error, so no big deal. And as those expenses increase, I'm not really super concerned. My guess is some of these expenses, the fact that they're accelerating this much, 45% quarter over quarter, 86% year over year, it could be some year-end bonuses, some year-end salaries, but it also could be tied to the fact that this company, as we'll see in cash flows, they're making major investments in their business, and it could be driving up those expenses as you have travel costs and other things associated with building new factories. Our total operating expenses came in at $1.7 billion. That's up 15% quarter over quarter and 25% year over year. So you take this 8 $5.2 billion in gross profit. You take our operating expenses of $1.7 billion, and you get down here to income from operations coming in at $6.5 billion in the quarter. Year over year, that's up 16%. Quarter over quarter, up 7%. You can come down through to net income, and you see down here that the company made $5.87 billion in the quarter. That's up 28% year over year and up 5% quarter over quarter. And based on the guidance that we have for the upcoming Q1, you got to imagine these results likely to continue. Now, from a balance sheet perspective, company has plenty of cash, got over $38 billion worth of cash. That is up considerably. I'll show you where the bulk of that cash came from. From a liability perspective, they've got a little bit of debt, some payables, some bonds that they just taken out, but nothing that I would be too concerned about based on the strong operating results that this company has. Also, the customers that this company has in the pipeline, the Apples and those such customers, no need to worry about any kind of investment that this company is doing at the current time. Now, I did want to take a look at cash flows. That's what we're looking at here. We've got our cash flows. This is for the full year in this left-hand column. So we've got 2021 here. We've got a United States dollar. We pull down our income before income tax of $23.7 billion. Now, this company, because they're building factories, they have a lot of factories that they've built. They have a lot of depreciation, which is this line here. They get to add this back in because this is essentially a non-cash charge that came in at $15.1 billion. You get net cash generated by their operating activities coming in at $39.8 billion. We can see here in their local currency, you went from 378 up from 259 year over year on that quarterly basis. So you're seeing that this company has generated, obviously, when you're generating this much net income over and above last year, you're expecting that to flow down through to the cash flows from operations. That's exactly what you're seeing. Now, here's the key thing with this company is they're investing heavily in their business. Take a look at this. Property, plant, and equipment in the most recent year came in at $30 billion. Hello, that's a big investment in the most recent quarter. The most recent year, because what I want to show you is take a look at just the fourth quarter. This is in the Taiwan dollar. They went from up from 235 all the way up from 88. So man, major investments in the most recent quarter, and certainly in the most recent year. This company is spending a ton of their free cash flow. Like I talked about, they had $39 billion worth of free cash flow. They invested $30 billion of that back into property, plant, and equipment. Now, the way they're financing some of this, okay, they're not burning through all the cash because you come out net cash used in financing activities. They actually are positive down here because you see these proceeds of issuance of bonds. In the last year, they issued over $13 billion worth of bonds. I would guess primarily, almost exclusively, to pay for this property, plant, and equipment. I think they've got a factory out here in the United States. I think they've got some globally as well. They're starting to diversify geographically, which could help quench some fears of this company. That some people fear that China could take over where this company operates, and that could be I think that is a large risk factor for this company. But as they expand their operation and manufacturing capabilities outside their home country, it could help diminish that risk to a certain degree. Now, from a technical perspective, I wanted to zoom this out and just showed you, this is kind of like the Google chart. This thing went on a monster run. It was down here about $45, and it went on a run all the way up to about $142. And so that got broken though. Technically, it got broken here. So I'm going to take out that line. That line doesn't really mean a whole lot. I want to zoom into our sideways consolidation, which is where we are now. I just put some bold lines down here if it wasn't already really apparent, but you have the bottom end of the range of consolidation down here at 108, okay? And it bottomed. This is a hard level of support. You see here, this stock to almost the penny bottomed out at this 108, and I'm rounding these numbers off. It's more specifically about 107, 108, 11, depending on where you want to draw this line, but almost to the factor of, pennies, this stock is bottomed out down here. If you get this stock to pull back for whatever reason down here to 108, that should signal an absolute smoking hot buying opportunity. Now, this stock is actually trading up in the pre-market. I am recording this before the market actually begins. I do want to make note of that. And so So depending on where the market happens and what happens in the market, who knows where this stock will end at the end of the day. But we can get a general idea that the market absolutely loved the results. And I think they loved even more this forward guidance into Q1. This is just absolutely fantastic. It's what investors absolutely dream of. So the stock is right where this blue line, that's actually where the stock is trading right now. Yesterday, we were down here at 132. Now we're up here at 139. Is it happy dance time? Not yet. I think you need to get above the previous highs. Now, we did get above a little intermediate high here that was at 134. The stock was actually kind of butting its head on that yesterday, and now we've broken up above that. But I've got this hard red line up here, and I made it red for a reason, that we need to get above this, okay? And that line right now is at about 142, depending on where you want to draw that in, 142, 143. You really need to get solidly above that, okay? We've seen NVIDIA do this. We've seen other stocks like Microsoft and Apple get above their previous highs, and then it's off to the races. I think you could trade this from a trade perspective, kind of a breakout trade. So you buy the rip above the previous highs, you set your stop loss again right here, because these stocks almost always come back and back test this line again, this area of resistance, and then you could pray the breakup. You could look at it in an NVIDIA chart, a Microsoft chart. Multiple stocks over the last year have broken above previous highs and then ran quite a bit, 20, 30, sometimes even upwards of 40%, especially when you're looking at an NVIDIA. Now, the opposite could happen. We could walk back up to this line and get rejected and come back down. That is actually, I think, the likely scenario with this one. And if that does happen, you have some buying opportunities on the way back here. I think the first firm one that I would be excited about is back here about $124 per share. And then as you see underneath that, I have some smaller lines here. I've made them thin for a reason. You've got buying opportunities at 120 all the way back down to about 115. And then obviously if we get a major pullback, likely in the broader markets, you get an opportunity down here at the bottom end of this consolidation range at 108. I would be monitoring TSM very closely. If you're in this one for the long haul, I wouldn't be concerned one bit. You'd really look good, and your portfolio performance would be really good if you broke above these highs. But if it gets rejected here, it does create some buying opportunities. We'll see how TSM trades in the coming days, but this company is firing on all cylinders. The guidance looked great, and these quarterly earnings look great as well. Hopefully you guys have a great week. We'll see you again soon. Good luck with your investments.